The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, we ended the week of trading on Friday with some red in row crops. We scored some new contract lows, for instance, in Novi beans, Dees corn. The wheat market did rally a bit and held on to some green on the screen, though, on Friday, so that was positive. It was a tough day in the livestock trade, though, too. Outside markets were relatively quiet, so not an overly great end to the week, but maybe not as bad as it could have been considering where we started the week. Let's talk about things. Joining us for a market conversation today, Craig Turter with StoneX is back with us here on the program. Craig, good to talk with you again, sir. How are you?
I'm doing well as can be, anyways. And yeah, thanks for having me back on.
Absolutely. So I guess let's take this a broad picture first. The grain markets have been a tough conversation for a while now, and it got worse this week, of course, with that big print from USDA. And really the soybeans in particular have seen a pretty hefty sell-off here this week. I mean, your perspective on this, these markets, I know it's a tough conversation for a lot of producers. I mean, what are you taking away from this past week here in the trade, Craig?
Sure. So we had to account for the WASDE report, and we're going to have a big soybean crop. I guess we'll start with the bad news first. I mean, it's going to be tough for soybeans at a 560 million carryout. Even if this crop just gets a little bit bigger, I mean, worst case scenario, maybe we're 600. But you would think that at these prices, if we're in the nines, we're going to stimulate some demand, hopefully. U.S. beans are now starting to be competitive, on the export market. So while China doesn't really prefer to buy from the United States, we don't have to. Eventually, they are going to. So there is some, there are some green shoots here, on the soybean market. But overall, we have transitioned from a tight market to an adequate market to now probably a burdensome market. And the reason why beans are kind of coming down faster from corn here too is it shouldn't be trading 2.6 or 2.5 over corn. Really should be like 2.4 over corn. So if corn's going to go to 380, 390, or 380 at a 2.4 multiple, that puts soybeans at like between 910 and 920. And I think that's what the funds are thinking too here. So again, it's tough. It's middle August. We've got a big crop. You're gonna have some harvest pressure. You're gonna have some old crop selling pressure, especially on the corn side. This is not the time to be long, and it's not the time, But give it a month or so, I can start arguing for being a bull in corn. And based on how things shake out with South America this fall and winter, you never know. But it's going to be a little bit of tough sledding here, especially for the soybean market.
Well, and I think about this too. I think some added pressure. There's been some of this remaining old crop liquidation. We've been kind of coupled with dealing with that here the last couple of weeks, and that's had an impact here across the board. But old crop, but even in a little bit into the new crop too, I think. And you look at basis, and we've seen some basis starting to drop along the river, for instance. And so I think all of this funds, you mentioned funds, they've continue to drive this bus and hammer this market. It just feels like everything is kind of capitulated on itself here as we work through the middle part of August here, Craig.
Yeah, so I have two things on that. One, historically, when you have a year where you already have adequate stocks and you have a pretty good harvest, you do get a lot of selling pressure in the last half of August, especially anything that's old crop that is a DP or a basis contract that is tied to September futures. Those have to be priced by first notice day. And it's just, and the thing is, the elevators, they probably haven't sold that grain or that, the corn yet. So once they buy it from the farmer, right, they're going to have to go around and turn and sell it on the futures. And that's just the market mechanics. There's really nothing we can do about it. So if you start to see some kind of panic selling or, maybe some selling and the buyers aren't there to support it, usually that's what's going on by, towards the end of August. But I will say this, like whatever the lows are that we put in, they will be relatively soon in the next month or so. And when I take a look at next year, we're already looking at our balance sheets, like how are we going to start marketing for 2025? What are we doing with grain and storage, that we're harvest with now? And when I look at when corn is below cost of production, we tend to be at 88 million acres since renewable fuel started, right? At 88 million acres and let's say a trend line yield, stocks come down year over year. Like they actually come down by about 100, 200. If at any point the market next year thinks we're like a 178 or 179 yield, which by the way, doesn't take much for a weather scare for the market just to be worried about that, you can make the case we're at a 10% stocks usage and deserve to go to $5. So for corn, you need acres to come down a couple of million, which I think they will. You need some dryness, you need some weather issues. And I wish I could say the same for soybeans, but for corn at least, there are realistic scenarios where you can get some nice price rallies in the spring and summer. So even if you have to sell now, just to make room for space or some cash flow, there are things you can do like with buybacks or collars in the market to kind of make up for that. So the beans are a little bit harder to manage right now, but for the corn, I think there's a rosier picture heading in for 2025.
Well, I want to talk about this as well. You got a webinar coming up on August 28th, and you're going to be talking about a lot of this stuff, looking at harvest, storage, marketing strategies, and thinking about that 2025 marketing year and how we can even get some of that marketing started here as we get into the fall and winter months. And you kind of alluded to some of that here a little bit, Craig, and not to give too much away for the webinar, we want people to attend and watch it, but I think a lot of folks right now, they're so fed up with the current price that they're not even thinking about the next marketing year and really looking at things to some degree. So, I mean, what would you say to them? I mean, I feel like this is a time where you really got to sit down and at least sharpen your pencil and get some plans and some thoughts on paper, so to speak, right?
Yeah. Absolutely. So listen, I've been doing this for a while and through a couple of different cycles, right? Since 2007. And when you get a situation like this where we are down in the dumps, right? And if you've been listening to the podcast or reading my newsletter, we've been concerned about stocks increasing for the past 3 years. This is the first year we're actually saying it's more likely than not that we start to tighten after, going into 2025, 26. One of the problems when we have prices like this and there's so much old crop out there, it's just natural to not want to deal with new crop. You just want to deal with old crop. When I say old crop, I mean when we get through this harvest, right? Not the new crop of the 25, 26 marketing year. But, the thing is, if we don't start paying attention to new crop, it's hard to get out of that cycle, right? And you need to eventually start, doing both. So for example, we could be hitting prices in September and October that are lows, multi-lows of the year, below cost of production. And what farmers could be doing is basically either buying cheap calls way out or doing costless collars way out. So when we do get this rally, like new crop corn at 435, 440 now, but if we do have 88 million acres and we do think we at one point during the spring or summer going to be even a 179 or 178, it's so much easier to sell that grain when you've already bought that call in the winter, right? For 15 cents or whatever it was. Because I know what happens. Like we get up to that big rally and either guys are past break even, they're starting to make a little money, and it's hard to sell, right? It's hard to sell in the fear of missing out, right? So you need to start putting even just some tools, for you to be able to get out there, sell some new crop when you get these big rallies. I know old crop's a problem. Like I'm very sensitive to that too, but we just, I've just found that, after we had the big run-ups in 7 and 8, and then again, the big upside in 12 and 13, like these are the kind of strategies you need after the markets come down after a couple of years to basically help guys sell old crop. New crop, it's going to be a challenge, but we can't let the new crop, opportunities and the strategy kind of get in the way of that. And so that's why I'd encourage everyone to come.
Well, and with that too, do you think that there are some out there, some producers who are maybe nervous or hesitant to use certain strategies and tools in the toolbox because maybe they're not as well versed in those? They're just used to, selling cash and that's that. I mean, talk about that a little bit because I feel like you have to be a pretty smart marketer in an environment like this right now, Craig.
Yeah, you definitely do. And I completely understand that. There's two things. One, you need to understand why we see the market the way we do. So I'll, like in my newsletter or in the webinar, like I'll go over the balance sheets, right? and we'll go over like, listen, if you're below cost of production, you rarely see you don't see acres go up, right? Usually acres are coming down. So if today's $4 corn is the 330 corn of 2019-18 when we start talking about inflation. So even if someone wanted to learn a little bit on how to do a collar, like selling a put versus buying a call, doing 5,000 bushels of that sometimes is the best way to learn it, because if you're producing, 10, 15, 20, 30 times that, sometimes having a little skin in the game really goes a long way on the learning curve. There's always risk on the futures and options market, and I completely understand that. But what I would say to people here is that when I go over the markets and I talk about them, the strategies are always in tune with the stock to usage and where things could go. Like, there is limited downside now in some of these markets. So some kind, like a strategy as I talked about, like a collar, would have been a bad advice 2 years ago when we're so high, right? And we're projecting stocks to get tighter. But, we kind of use these strategies in 16 through 19, and I like them a lot now. But you're absolutely right. Like, there's education that's involved. People need to be comfortable with it. And they need to understand why you see the markets the way you do. You got to buy into it, and you got to be comfortable with the product. You got to be comfortable with the risk. But in this time with these prices, like, we got to start getting a little bit more advanced and sophisticated with it.
Well, of course, that risk of trading futures and options can be substantial. We're talking with Craig Turner from StoneX here today on Market Talk. Craig, love your thoughts maybe on just the demand side as well. Obviously, demand hasn't been overly abundant. We've seen some sales tick up. There's been some talk in the trade that maybe China would step in for some beans here at these lower prices, et cetera, et cetera. I mean, what's some of the latest chatter you're hearing in the trade right now when it comes to the U.S. demand picture, Craig?
Well, the nice thing is corn is competitively priced now. And if you take a look at the major exporter stocks, it is getting tighter outside of the United States. Soybeans, we would love to see some more demand. But when you take a look at the pace of new crop sales, it's just not been there. Now, you hear rumors about China asking about bids for cargoes and stuff like that. Nothing's really come through. You'd love to see it on corn too. Typically, people, you see the big buys in September and October, during harvest, and not necessarily, before harvest. So unfortunately, I think the next 2 weeks are going to be rough. And when we start seeing export sales, we're expecting them to come in September and October. And listen, seasonally, you put in a low, then you start to see export buying, you'll see short covering, funds will start to get out. We'll have to see what happens with basis, but yeah, it's September and October is when we're looking for a pickup in demand.
We saw a lot of data in the outside markets here this past week as well. Really kind of had stocks, energies, metals moving around. Any big things in some of those outside macro markets that you're paying attention to as we move forward through the rest of the month, Craig?
Well, so everyone's expecting a Fed rate cut in September. Some of the manufacturing data was bearish, but recently we've had some pretty good news on CPI and PPI coming down below 3%. So it's kind of a mixed market. I'd say the biggest red flag I've seen is, China's largest steel company basically said, hey, we're going to have to start getting aggressive on exporting steel out of China because their construction demand is so low. So that's always concerning. People talk about Dr. Copper and looking at copper prices, get an idea of global economy. Steel can be looked at the same way. So it looks to me that, if the Fed cuts in September or December, we'll just find out. There's no major cracks in the economy. We did just have like a 5-10% correction in the S&P. That seems to be fairly normal. So, there are layoffs out there. Which is always unfortunate, and that always draws some concern. But for every positive, there seems to be a negative on the macro economy, which to me means it just kind of chugs along for a while until something breaks.
Good stuff, Craig. Let's give us a plug for that webinar coming up on the 28th. Where can folks get signed up, get more information, all that good stuff?
Absolutely. You can just go to our website, grainsandoilseeds.com. That's plural, www.grainsandoilseeds.com. It'll bring right up to our registration page. You can read about what we're talking about, which is going to be basically our marketing strategies for harvest, for storage, storage strategies, and also how we're going to start our 2025 marketing year.
Grainsandoilseeds.com again for more information. Some good education going to happen there on the 28th. Craig, any final thoughts or anything you want to reiterate for producers listening in here today?
Yeah. I know things sound kind of bearish right now, but in the next month or two, not only will we put in bottoms, I think we're going to be putting in very long-term bottoms in some of these markets. And when we used to look at corn, for example, being 350 to 425, that new range is now going to be a $4 to probably a 5.25. And we just got to get through these next 6 months to let the market work some things out. And whatever we need to do in the futures and options market, or you need to do on the farm, it's going to be a little bit of a grind, but things do get better on the balance sheets going forward.
Well, we appreciate the time. And again, folks can find more details on that webinar, grainsandoilseeds.com. Craig Turner with StoneX. Craig, it's always good to talk with you, sir. Thanks for being with us on Market Talk today.
Thanks very much. Happy to be here.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.